So yeah, I mean, I started off in real estate about 3 years ago, and back then, that's when I bought my first investment property. It was on the west side of Detroit. It was right around that $10,000 mark. I mean, West Detroit isn't you're not. It's not like California real estate where it's super expensive, or pretty much a lot of other places where the real estate can be a lot more expensive. So about 10,000 range, and then I land contracted the property for 1,000 a month for 36 months. I'm not sure. Are you guys familiar with a land contract?
Yeah, why don't you explain that just a little bit?
Yeah. So a land contract is similar to like a car financing. You become the bank essentially. You give them the loan. You sell the house to them on payments, or you sell something to them on payments. Essentially, that's what it is.
All right.
Yeah. So I did that, and I mean, the main reason I did that was because by the time I had acquired the property, I had no money left in my bank account. I was 17 years old at the time. I only had 11,000 saved up, and I spent everything I had. So at that point, it was definitely rough. I ended up land contracting, and then the person that I sold it to, he was a general contractor, and he actually stopped paying me, but he fixed up the property around 70 to 75% of the way. And then I just went in. I think I put in another 3,000, and I sold the property again for cash, and that's pretty much how I got started. And then the next deal, I just kept on doing the same exact thing. And then some I rented out as well. Most of them I would rent out and go from there. And a lot of times I'd be buying these properties from an auction in Detroit, or, simply waiting for a good deal. Because sometimes that's the hard thing to do, because finding good deals is the most, very difficult thing to do. But that's pretty much how I got started in real estate. And then I'm also a college student. I go to Wayne State University in Detroit, and I was supposed to go down the accounting path. I was supposed to go become a Big Four accountant, a CPA, and then I started getting more invested in multifamily real estate. Started learning a little bit more, and then I just recently closed on a 33 unit deal out in Michigan. It's in Linden, Michigan. So it's about an hour away from like the downtown area. If anyone's familiar with the University of Michigan, it's about 30 minutes away from Ann Arbor. So, we're really pumped about this deal because it's a deep value add deal. The rents right now, they're about 200 below the market. And we're able to implement storage units. So we're taking a pole barn. Like, have you guys ever seen on the countryside, like the big pole barns? We're taking those, and then we're going to converting those into storage units for the public. Because a lot of people around there, they have boats. So when people have boats, they need somewhere to store their boats, and we can offer that service.
How many pole barns are on not to interrupt you, how many pole barns are on the property?
There's only one pole barn, so we'll only be getting 20 to 25, more like 20 storage units out of there. But that's all right with us, because at that point, and it's going to help out NOI tremendously, and we're excited for that.
Okay.
Yeah, and so it's about 28 2-bed, 1-bath, and then 4 2-bed, 1-bath. 4 1-bed, 1-bath. And then there's also, this is actually pretty weird. I don't really see this often, but there's a single family home that's also attached to the property. It's on the same tax parcel, so I guess it was just attached to the property. That's what I recently closed on about a month ago. But to break it down to you, I've also worked in the background of public accounting, and that's pretty much my real estate background.
So now you said that a month ago you purchased the single family home that's attached to this 33. Is that what you did?
No. The whole apartment complex has a home attached to it. So when we purchased the apartment complex, we also purchased the home with it.
Oh, okay.
Yeah. So we're pumped for that.
Okay, that's good. Now, is that occupied right now? Got a renter in it?
Everything. So there's one vacant unit. That's the unit we're renovating right now. We're doing the renovations on it. And then after that, we're going to be leasing that up too, and we'll be good to go.
So now, how did you find this property? Let's step back.
Absolutely.
How did you find it? How did you fund it? All that kind of different stuff.
Yeah, sure thing. So I work a lot, I guess you could say. I usually work around, I'd say 65 to 70 hours a week, maybe a little more. And a lot of us is picking up the phone and hustling, sending mailers, driving around. But this one I specifically picked up off of, I believe it was a mailer. Yeah. Picked
Okay.
up
So
off
you
of a
direct
mailer.
mailed the owner,
Yeah,
and
exactly.
they called you and said, hey, how'd that conversation go, especially with being at a seller's market? Because I've done the same thing, that I'm trying to understand. I've done the same thing, and most of the people that call say, okay, great. Yeah, I'm not thinking about selling, but hey, if the price is right, $10 million.
Yeah,
Kind of
yeah,
walk us through that.
absolutely. So one thing was when I had the phone call with the seller, I had the call with the owner of a building that seller was trying to buy. You know what I'm saying? So that seller, he was trying to buy this building up in a city called Flint. And the person I had the call with owned that building. And he was like, when that guy said I own the building, he was like, oh, you own that building? So right then and there, he knew we could close.
Oh, okay. So the person you were talking to, the gentleman, you had already, they already had
Exactly.
a building. Okay. So the
He,
credibility part of the
exactly.
equation.
That's going to be nice. The credibility is really a big factor into all of this because at the end of it, if they don't know that you can close, they don't want to. I mean, even I'll be honest, like even this seller, he didn't want to sell, and we had a deadline. If we didn't close on the 22nd, we would have lost the deal because he didn't think that we would close.
I guess at that point, obviously you probably, done some due diligence, probably walked
Yeah,
the units. So he really thought all this effort, you
it was
still weren't
wasted.
going to close?
Yeah, he really thought that because I mean at that point we had actually used our extension clause. So our extension clause, it was a 20-day period where we could wait on the deal on the closing, and we used it because we wanted to get better financing, and we got pretty good terms too. We got a 25-year AM with 3.5 rate, and a 7-year term.
Oops.
I got muted there.
Oh, sorry about that.
But
So now, no, go ahead with the terms again. I'm sorry. Was it an agency debt?
no, it was not agency. It was through a bank, private bank.
Okay. All
Yeah,
right. So what were the terms again?
a 3.5 rate, a 7-year term, and then a 25-year AM.
Okay.
Yeah.
Awesome.
Yeah. So I mean, there was pretty good terms there, and then I mean, we wanted IO period, but couldn't get that unfortunately.
Got
But
it.
yeah, no. So go ahead.
No. That's good. So I guess the next question would be is who did you bring in? Did you have the balance sheet? Did you have the liquidity to do this? Or did you bring a partner in to help you with this?
Yeah, I mean, I'm 20 years old. I didn't have that, unfortunately. So I brought
That's
my
why I
partner.
asked the questions.
Yeah, that's a good question right there. Yeah, no. So I brought in my partner, Tori Sheffer, great guy. Brought him into the deal, and we walked the units together. It was good for me because I'm coming from a single family game, and multifamily is a different game for sure. So that was definitely a good aspect for me. I probably would have missed a couple things. Definitely couldn't have raised the money. That would have been an issue. I couldn't have got the financing without him. So, I mean, not just that. I mean, I learned a lot so far. I've learned a lot this past couple of months.
Gotcha.
Probably learned more than I've learned in college so far. No, I'm joking.
Well,
Actually,
at least the stuff that you're going to learn here can get you, wealthier than the stuff in college, because no knock in college, trust me, it's
yeah.
so
I
now,
mean, no, I mean the financing. Like, I like underwriting. So if anyone ever needs help underwriting a deal, feel
okay.
free to let me know. I'll be, I'm a nerd in the sheets. I'll tell you that.
Okay. Well, that's good. That's good to know. Thank you for that offer. That's awesome. So now when you were underwriting it, now did your partner, seeing that you're so new to this multifamily, you're learning, did you bounce your underwriting off of your
Yeah.
partner and say, okay,
So I kind of
are
went
we
off
close?
my
Are we
first,
not close?
yeah. So I first went off my partner's underwriting because for me, um, I didn't really have much of I knew I knew I could do it, but I didn't really. I'd rather just go off of his. So I went off of his first, and then I got it on my like once we had the deal under contract and we were pretty much ready to close. That's when I just focused on underwriting because I was like, okay, like I don't have any other deals under contract. I was like, okay, I'm not even just because I don't have any other deals under contract, I might as well still do something, you know. So I focused on underwriting, and I've gotten a good hand on it, and that's my thing now.
Okay. Okay. So let's go back to the story. Did you put any money down or put money hard to kind of quell the sellers? Well, these guys aren't going to do anything. Or what you got? How did
we had about 50 grand down, 50 to 60 grand down.
Okay.
In the EMD, attorney costs, everything like risk money that we could have lost if we didn't close on the deal. I think around there.
Okay. So to the up to that point, the seller was still saying, well, you guys aren't going to close, even though you were there getting stuff. So at that point, did he say, oh, you guys are real, this is happening? And you mentioned.
Yeah, I mean, he knew, at this point, he knew that we could put up 50, 60 grand. He just didn't think that we'd be able to close on the deal. I mean, even when he saw us, he looked at us, he was like, you guys are babies. He's like, you guys look like my kids. And I was like, oh, man.
Well, I mean, how old is your partner? I mean.
Partner's 27.
Okay. I mean, we all got to start somewhere, right? I mean, I was 27 again. I mean,
yeah.
Okay.
I mean, I'm like, with me, like I have a big beard, and I can pull it off a little bit, but it gets a little difficult sometimes. I think I had trimmed my beard at the time, so that he was thinking I was like 19 or 18 at the time. It was even worse.
So did you have a broker involved, or were you just dealing right with the owner?
Right with the owner.
Okay.
I mean, that's the hardest thing to do, dealing right with the owner because they're hidden.
So I guess why was that the hardest thing to do?
Because people don't want to talk. I mean, it's hard to get in contact with the owner, especially with the apartment buildings. I've noticed. Homes, yeah, it's not too hard, but apartment buildings, every broker talks to them before.
Gotcha. So I guess how did you? So let's go back. Other than the because I'm kind of very interested in this. So you got this gentleman. You picked up the phone. You called this guy. How many times did you talk to the gentleman on the phone to where he said, okay, did he do it twice? Is that what you're saying?
For the partner or for the deal?
Well, no, for the deal. When you said you contacted the
two times. So I had the first call, and then I had the second call. And the second call, we went to go check it out.
Okay. So at that point, he was open. He was more comfortable. At that point, did he throw a number out, or did you throw a number out?
Yeah, so we were in the laundry room, and we were asked how much do you want for it. He said 1.8, and we said, well, we can. Honestly, we would have paid more. We would have paid like 2.1 too, if you had asked.
Okay, so wait, hang on, wait a minute. So at this point, before you went out there, you didn't have a price. He didn't say, okay, I want $5 million for this thing. He just says, come on out, because he knew that you guys weren't going to close, or whatever. So you didn't ask him until you were in the line.
At this point, he knew we were going to close because he had talked to my friend with that building.
Gotcha.
He knew that we were going to close, so he liked us. I mean, he still likes us. It's not like he hates us. They're a good guy, but and I think he had stopped thinking we were going to close in January.
Okay. Well, yeah, with the pandemic. So it was when you're on site and he just threw out the 1.8. Did you ask him where he got that number? Because you just said you could pay more. So obviously there's a little bit of meat in the bone. Is that a number that he was giving them from a broker a couple of years ago?
Yeah, I think that's just what he thought the market traded at. Okay. I mean, that's a 7 cap right there, and he really thought that's what the market trades at, even though that market really trades at a 6.5, 6 cap. I think that's because the previous deal he did was also in a similar market. He probably didn't do. I think he just had really bad research, honestly, because
that's good for you.
I mean, yeah, it was great because people came up to him after we got the deal under contract and offered him $2 million, and he turned.
Oh wow, really?
Yeah.
Okay.
He was waiting for us not to close. He was excited for $2 million, but I mean, it was what it was.
Well, at least he honored the contract with you guys. That's
he had to, or else we would have to sue him. That'd been fun.
Wow, that's crazy. Well, that's good. That sounds good. So now, it's 1.8 mils, 33 units. What do you, any rehab you have to do to it? Any
Yeah.
reno?
So right now the rents are in that ballpark of like 700, um, around there. So to bring them up to 850 and 750, what we're gonna do is we're gonna renovate the units, bring up new carpet, vinyl planks. It's funny, previous contractor of mine, he left me about probably 1,000, no, maybe 1,500 square feet of vinyl plank hard like flooring, um, at a house of mine. So I get to use that for the rehab. I'm pretty excited. But
Wow.
yeah, at the same time, I mean, I got it for free, I guess. But yeah, so we're gonna put in new carpet, countertops, some new amenities. We just had some new countertops installed into the vacant unit. So
Gotcha. Now,
rentals there, and
do
then
you
we're
have
gonna bring
one
up the
vacant
rents
unit?
because those market rents, those go for like 950 for the 2-in-1s, and we're offering in at 850. So we know we'll get that because there's the city of Fenton right here, and then there's Linden right here. And if you're people don't want to move because they really love this area. Um, it's a very small town type area. People love it. And right next to each other, the Fenton population is huge. And the Linden, Fenton people all live in the city within each other.
Gotcha.
And no one wants to move out of there, and everyone's going for 950. So if we offer it at 850, they're still going to take it.
That's awesome. That is awesome. Awesome. Okay. Well, listen, let me open it up to questions. Anybody have any questions? Go ahead and raise your hand here, and we'll kind of try to do this in an orderly fashion. If anybody's got any questions or anything I should have asked.
By the way, guys, sorry for the delay. If I was a little late, I was in California a little confused on the time zones since we're a little 3 hours behind.
No problem. No problem.
Yeah.
All right, Bruce, go for it, sir. You got your hand up there, sir.
Hey, Bruce.
Thank you, Pat. Hey, Z, I just wanted to say that the story, the way you put this together is a great example of making a deal happen. It's just, a lot of times people go, hey, there aren't the deals out there. There's this and that, and yada, yada, yada. But I just want to say congratulations on putting this deal together and, finding the seller, orchestrating it, and just making it happen. So, you're just a great example of that there are things out there. You just got to look for it and make them happen. So congratulations.
Thanks, Bruce. I appreciate that.
Thank you, Bruce. Thank you. James, James, go ahead, sir. Hopefully we only have one James.
James, how are you?
I'm good, thanks. And yeah, that's really inspiring to see someone do it at your age. I know when I was your age, I was not doing anything useful. I think I was just studying for my exams.
I do some of that too. I don't like doing it, but I had to.
One question I had, well, I had probably about 1,000, but the one thing I'm always struggling with is like knowing what is an appropriate cap rate to compare these properties against. So like, if you're trying to come up with that purchase price, I'm looking at this deal right now where it's an undisclosed amount for the property. And you can work out the NOIs relatively straightforward, right? But how do you know what is a good range of cap rates to use?
Yeah. I mean, I definitely look at the trend, look at the properties that are going near it. I would say that's something like, for example, on our property, we knew what the Fenton properties were trading at, right? Like, you got to know what the other properties in the market are trading at. You got to either maybe check the comps on Rent-O-Meter, or CoStar if you have that. And that way you're able to determine what are the comps trading at, what are the market cap trading at. Does that help?
That's a really good question for like David Monroe.
I was just going to say that was a good one.
David's pretty good at kind of determining that information.
So I have a different opinion about cap rates. Most of the people in here that know me know I don't care. I care less about cap rate. So basically what you do, and James, I guess, is who asked that question to Silva.
Yeah.
you need to determine what your risk level is. So if I'm going to whoop $100,000 out of my pocket and I'm going to put it down on an investment, how much of a return do I want for that investment? And then you go pull your market rents, and Z was correct. I mean, you need something like CoStar. I mean, I don't really recommend Rent-A-Meter, but if you don't have a more affordable source, then it's better than nothing. Or you reach out to somebody like me, or find a CCIM or a high-end broker in the market that can get you access to the CoStar reports, or Reese, or Axiometrics, or any of the other big data sources to be able to provide the rent comps for the area. And when you get your rent comps and you do your underwriting with the rent comps, and you determine what your return is that you want on this investment, let's say that return is 15%. And the internal rate of return when you do your underwriting, after you put all your rent comps in there and you adjust for vacancy and you adjust for new taxes and you adjust for new insurance and you adjust for new management or new payroll, depending on, the size of property you're getting, you make those adjustments, you're going to see that if, let's say it's Austin, Texas. In Austin right now, the average cap rate's about a 5.2. Okay. You're going to find that you're going to drop, and let's say the broker presented that property at a 5.2. You're going to find that on the existing T12, if that's all you use, it's probably sitting right about a 5.2. But when you make your adjustments and you put in the market rents and you adjust for the vacancy loss from the market rents and you adjust for your expenses, you're probably sitting at about a 4.3 or 4.4 cap at the end. If you walk away from the deal at that point, you've lost. Because you think that just because your adjustments took it way down means you shouldn't invest in it because it was below a 5.2. Now, I know I'm using really low cap rate examples. I'm just trying to use in a market everybody knows. So what you do is you look at year two. So, okay, if these are market rents, can I take in the next 12 months or next 18 months or next 2 years, and can I increase my rents to where they're stable with the market? Can I get them to market rents or close to market rents or within that vacancy range? And when that occurs, whether it's year 2 or year 3, if I take my NOI and I divide it by the asking price or whatever price I feel I want to pay for it, then what's my cap rate? And if that cap rate is 5.2 or greater, that's probably a deal you can go after, because that's what they're providing you. They're providing you with a stabilized cap rate. That doesn't mean that property's currently stabilized. Mm-hmm. But when it is stabilized, it's worth 5.2 because the market says it's worth 5.2. Now, that market is also saying that this Class C property, which traded at 8%, and this Class A property that traded at 3.5%, in between, we get 5.2. It's the average of everything, right? So that's taken everybody's risk in the market into account, which is why you have to discount all of that to get rid of all the noise. Just go look at your rents, do your underwriting, and determine at stabilization, whenever that occurs, whether it's year 2, year 3, most institutions will use year 2, some will use year 3, depending on the level of execution they have to do. And they'll say, okay, as long as I'm greater than market cap at stabilization, I'm going after this deal, which is why you guys see these acquisition caps under 4% and everything else. Actuality, stabilized cap, it's probably well above 5. That's all I have to say about that.
That was really good. Thank you, David.
How do you really feel?
Right?
David, yeah.
David is always a knowledge wealth, to say the least. Thank you, David. I appreciate it. James, I'm sure that was way over, but that's a good thing to look at. And
yeah, James, feel free to reach out anytime, by the way.
Definitely. Somebody asked a question about in the chat, and I don't see anybody else's hands up, so I'll take this question. The material you have in your direct mail, what was it? Anything specific? Did you just, because obviously you're new to this business, did you use direct mail in your residential, and that's why you carried it over to your commercial?
No, Oh, funny story. Toria actually told me, my partner, he was like, hey, send mailers. I was like, okay, cool. Send mailers. And then I sent mailers. And so he was really the one that introduced me to it. But in single family, I never really sent mailers. I bought houses from property auctions.
Okay.
But other than that, or brokers that I knew. It's funny, and honestly, I don't really wholesale, but just because I was in Detroit for so long, people send me deals now, and all I do is, I just forward an email and I wholesale a deal. I don't plan on wholesaling. Like I never wake up in the morning and I'm like, all right, I'm trying to chase a wholesale deal, but now it just happens, and I let it be. But point being is, yeah, I talked to brokers back then for Detroit houses.
Okay. Somebody also pinged in and said, can you kind of explain what a mailer is?
Yeah, absolutely.
Yeah,
So
sorry about that.
It's an 8x5. I mean, it's like a normal page. Send a letter and say, hey, I saw your property. I'm interested in this and would like to put in an offer. If you're interested in hearing an offer from us on this property, give us a call. Put your email on there. I usually like sending the mailer from like partners or holdings or capital group type like LLC. Something that's a local LLC too, like something that's maybe maybe you could set up an LLC in this if you're not in that state. Let's say you're in California. I don't know if anyone's in California here or not, but point being is if you're investing in out of state, you can maybe set up an LLC over there and then send the mailer through that, because I've noticed that people call back more when it's a holding group or a local LLC.
Gotcha. Instead of John Smith, hey, I'm going to buy your property, because they know that, probably you're not.
Yeah, John Smith in Nevada, like that's not going to fly all the time.
Not going to cut it.
Yeah.
Okay.
So, I mean, that's just something that's helped me. So I go for it.
Okay. I appreciate that. And then somebody pinged in Fenton. They said, what type of market is Fenton, like size-wise? Is it pretty small? And did that concern you?
It's a middle size. It's probably, I'd say there's 50,000 people in there. Maybe a little.
They got a great barbecue place out there.
Oh, they do. I've definitely heard of it. And there's Lake Fenton. It's beautiful.
I think
Lake Fenton is a beautiful place to be.
So you weren't targeting, over 100,000 or 200. You just, the 50,000 really doesn't.
I mean, Michigan is where I grew up, right? So like I knew Fenton, I knew Linden, I knew those areas. So that's why I didn't really focus on, oh man, like I don't want to focus on like, because I didn't know there. Like I knew the area like the back of my hand. So I had no problem investing with it. I mean, there's another deal that I'm working on. There's actually so the next deal I'm working on is a hotel deal. But it pretty much fell through today. And that deal is in Pontiac. Oh, well, Bloomfield Hills, Pontiac. And that's just like in the back of my head too. So I don't really focus in on the population and data as much. But yeah.
Okay. So that's not because you know the area. So you figured, hey, you knew the two areas you said, Linden and then Fenton. The people would want to live in that area anyway, so renting would work.
Yeah, schools are great there. Not just that, but besides the point, like the area is great there. People want to live there. People either go from Fenton and they move to Linden, or they move from Linden to Fenton. And I mean, even my partner, he has a building out in Fenton, and his apartment building is same situation. They're renting more. He got in when they were renting for like $780. And now they're renting for like $950, $1,000.
Gotcha. Okay. So we didn't talk much about like the exit strategy and how you funded this deal. So kind of cover us from there. You bought the thing. How did you syndicate it? Did you put money in as partners? And then what's your exit strategy?
Yeah. So we had a syndication, but we had a pretty small syndication, meaning it wasn't like 30, LPs or any situation like that. We had about 3 investors, and the GP team also put up money. But point being is, we had a smaller deal happening, but we syndicated the thing. Yep.
Okay. So it's basically what, friends and family kind of invested in it?
Situation, yeah.
Okay.
People that we know, people that Tori knows more so.
So now what was, what's the hold period you guys are looking at?
Yeah, so we're looking for 5 to 7 years. We've projected for 10 as well, but we're planning on doing a refi by year 5 max.
Okay.
Yeah.
Now,
I mean, we're giving an 8% preferred to the LPs
okay.
and a 50-50 equity split. So
Okay, 8% preferred to the LP, and then you did, what'd you say, 50-50?
yeah, 50-50 equity
Oh,
split.
okay. I haven't heard that. That's good. Okay, cool.
Yeah, I know people are usually doing 80-20, 70-30, but you know, we felt that because we're giving an 8% preferred, that we could easily give a 50-50 equity split, and that would be okay.
That's
And I mean, our
interesting.
investors were okay with it, so we felt that it was okay.
Yeah, I think I probably would have been okay with that too. That's pretty strong. That's good.
Yeah, thank you.
Wow. Okay.
Yeah, yeah, that too. And then, you know, there's another deal that right now in Michigan, it's very tough finding deals because, like, you know, Pat, I'm sure you're aware, these market, like, they're asking for 90 a door with rents going for 500, you know, 600. And I'm like, man, like, are you like?
They just don't pencil.
They don't pencil out. But yeah.
But I guess this is your first. How many deals did you look at
Oh,
before you got this deal? Because obviously this is a feather in your cap. And this is awesome, and I appreciate you spending time with us tonight and telling us. But how many did you look at to get this?
oh man, that's a long conversation. I looked at least 100. Yeah, at least 100.
Okay.
Because I'd been trying to get into multifamily. So I had actually, before multifamily, I was raising a fund for Detroit property, and I'd raised around 100 grand in soft commitments, and then COVID happened and that failed. So then that's when I started looking into multifamily, but I wasted a lot of time on it because I was just so frustrated with the whole COVID thing and how the auction and how Detroit property had went to garbage and like couldn't get any more. But yeah.
Interesting. Okay, cool. So now you have your own company and it's Hills Capital. So I definitely put your contact information in the chat as well. I'll tell everybody else, please do that again as well, because what I'll do tomorrow, I'll send out the chat with a link to the recording of this. So we'll be able to, you know, see the recording, but definitely put your contact information in there. So you guys can, you know, exchange numbers and stuff like that. And we're not going to market to you, so don't worry. We're not going to do that. But anybody else have any questions? We got about 5 minutes left here because I do want to respect everybody's time. Any other questions that you guys?
And I'm more than happy to stay back a couple of minutes or whatever. I know it's a little late, so I mean, not just that, but I'm more than happy to.
Okay. Well, thank you. I appreciate that.
Yeah.
Hey Pat, could someone? I had a question already. Somebody asked me a question. Could you or Jim Biggs talk about a GOB network?
Alrighty. Let me see if Jim Biggs is still here.
Yeah, I'm here, Pat.
All right, go for it, sir.
Fly on the wall, enjoying the conversation. Z, what a inspiring story. If there's anyone on this call that doubts that they can do this and can become a multifamily apartment owner, then you just need to reach out and have a little longer conversation with Z. Just a wonderful example. So the GOB network of apartment investors, there's several of us on this call tonight that are members. It is an organization that is by invitation only, where we put together a hive mind in an open source community for real estate, to democratize real estate and make it available to anyone and make apartment ownership available to anyone. And we do that by trying to provide people with solutions to problems and help them overcome obstacles. So a lot of people get started in this and have
have a lot of energy, find a good deal, and then realize that commercial financing is very different from residential financing, and that you have to have a net worth that is equal to what you're borrowing. And then you have to have liquidity that is at least 10% of that net worth, and for that particular deal. And you also have to have a sponsor to help you, especially on your first few deals, in order to get this non-recourse debt. And so with those obstacles, some people might ask, well, why would you do that? Why would you go after these types of assets? Why not just do something that's in your wheelhouse that you and just a couple of friends can take down? And the answer is the non-recourse portion. Most of us started out in single family, graduated to small multifamily, and then when our banker told us, well, you can't close on that next deal because your debt to income ratio is out of whack, you're going to need to wait a couple of years. And most of us are usually not thrilled about those kind of answers. And so that's when we learn about non-recourse lending and syndication. And all that word means, syndication, it's just a group of people that go together and pool their money and their resources to take down a much bigger asset. And so that's what the GOB network is there for, is to try to help you overcome those obstacles. And we built it based upon 40 years of frustration of trying to find programs and gurus and platforms to help accelerate our career. And quite honestly, we couldn't find everything that we were looking for. And so we built our model based on 3 pillars of a business plan that come out of the tech industry. And one of those is the freemium model. So we don't have a financial cost to join the program, but there is a cost. It's just not financial. And so if anyone's interested, we put in the chat the website gobnetwork.com, and feel free to reach out and learn more about us there.
Thank you, Jim. Thank you very much. And I'd like to get a little testimonial. Yes, the group has been awesome. Obviously, Z and I connected, but also a lot of people on here, Aaron, Jim. It's been just fantastic, especially with the pandemic. It really helped because obviously the meetups or the in-person things kind of died, and having something like this was just fantastic that I could meet people and experience and go over things that I needed to go over with people and meet people. So that was very nice. But thank you very much for that, Jim. I appreciate that.
Yeah, guys. Absolutely. Thank you so much for having me. I mean, feel free to reach out. I just dropped my email in there. I'm more than happy to connect with anyone.
Definitely.
At the same time, yeah, multifamily is a great game. I like it a lot more than single family. Now my next deal is trying to be in the hotel business and do a conversion for that. So
that's where I was just going to ask what's next for you. You just kind of answered the question. So you're looking at a hotel now. Explain that a little bit.
Yeah, let me answer this question real quick.
Oh, okay.
Good deal. Yeah. So 8% preferred essentially means whatever the profits are of the property, the first 8% on invested capital goes to the investor. And then after that, any profits are 50-50 split between us and the investor. Cool.
Thank you for explaining that. Thank you. Yeah. Thank you very. Did the person that asked that was that clear enough?
Yeah.
Yeah, I got it. Appreciate that.
Okay.
Absolutely.
Awesome. Okay. Thank you. Yeah.
But yeah, Pat, what were you saying?
No, I was saying this real quick as far as your next steps. You said something about a hotel conversion. So kind of you're really into 33. Now you're going to a hotel conversion. Kind of how do you jump from that to this?
Yeah, the thing is, I want to do my next deal in Michigan, and I just, for some reason, it's getting very difficult to find quality properties out here, and I don't want to buy in Detroit again. So point being is, I don't mind doing a conversion, and I have a couple of developers, and I know they're good. They've been in the business for about 20 to 25 years, and they're at that stage of their life where they're like, hey, we'll just find the deal. That's the one thing I've learned. You just find the deal, and the people will just come.
Yeah, that's great. That's great.
You know, people come, so they're like, hey, find the deal, and you know, we'll be more than happy to guide you and fund the deal as well. Really, you know, like why not?
Yeah,
So that's something I've definitely learned. Is you just got to find the deal.
that's 99% of it, isn't it?
Yeah, that's what it feels like, pretty much.
Interesting. Okay. Well, listen, thank you very much for your time, Z. I appreciate it. And thank you for sharing your story. I appreciate you coming on and sharing it with everybody. And everybody, thank you very much for joining.
Could you put my email in there so everyone has it? I'm not sure.
I can do that. Again, go ahead and put your information in the chat so we can get that in there. And I'm getting your email here real quick. Sorry about that.
No worries.
Pat, do you send out the chat, or do you remind everybody how to save it?
Yeah, I send it out, but I'll remind them right now how to save it. Open up the chat window, click on it. Thank you, Jim. Click on it. And then in the bottom where you would type something in there, there's 4 little dots on the far right side of the chat. Click on those dots and it says more. And then it says, you click on it and it says save chat. So when you click on the save chat, that saves the whole chat. So you don't have to busy copy stuff down. So when you do that, click on save chat and then go and see it in the folder. So you make sure where it goes. So if anybody has any questions about that, and here's Z's email. So definitely please reach out to him.
Yeah, shoot me a note. I'd love to connect. Great. Yeah.
And thank you, everybody. Unless there's any other questions, I'm gonna let you go because I want to respect your time, and I want to respect your time too, Z. I appreciate it very much. It was very nice finally meeting you and getting to talk with you. Hopefully, we're going to meet in person here. Both in Michigan, but definitely thank you very much, everybody. I appreciate it. Until 2 weeks from now, we'll have another guest speaker. We'll have Michael and Susie on. And watch out for the notifications for that. And thank you very much for joining, and I appreciate it. And have a great evening. Enjoy, everybody.
Great, guys. Thank you. Yep. Take it easy.
Hey, good morning and good afternoon, folks. My name is Pat Gage, and I'm the host of the Commercial Real Estate Investing Mastermind for Multifamily. This is a bi-weekly mastermind where we bring people in from the multifamily business that are just really crushing it, okay? And April 7th is no exception. My guests are Michael Barnhart and Susie Server, and they just finished closing an 88-unit complex. And here's the kicker, folks. Their backyard where they invest in is over 4,000 miles away from where they live and work. So it is possible, okay, folks? So please join us April 7th, 7 o'clock p.m. when Michael and Susie go over not only the deal itself, the 88 units, as well as the team they put together and the raising of the money, so because they did a syndication for the deal, as well as how all this started, what's the emphasis for adventurous real estate investors. That's the name of their business. How did that all start? They're going to cover that. So come to listen, come to ask questions, and come to learn, folks. Wednesday, April 7th, 7 o'clock. Reserve your spot right there. The bit.ly link is right there. It's also in the description of the video. Please come with your pad of paper. Come with a lot of questions, and you're going to get great information from Michael and Susie. And again, please register right now to reserve your spot, and love to see you there April 7th, 7 o'clock. We'll see you then.